So let me ask you something. Have you ever bought a stock that looked absolutely perfect, only to watch it immediately start doing the exact opposite of what you expected? Yeah, me too, and you know what I realized? Investing in stocks is basically like dating. Stay with me here, because this analogy is about to make your investment strategy a whole lot clearer. When you first meet someone, everything is magical, right? They're charming, funny, they laugh at your jokes. You're thinking, this is it, this is the one. You ignore the red flags because you're caught up in the excitement. Same thing happens with stocks. You discover this company, and the story is incredible. Revolutionary technology, growing market share, a CEO who sounds like a visionary. The charts look beautiful. Every analyst seems bullish. You are convinced you've found the next big winner, so you go all in, emotionally and financially. But then, reality shows up. In a relationship, the honeymoon phase eventually ends. You start noticing things. They're not as organized as you thought. They get weirdly defensive about small things. Their charming spontaneity is actually just poor planning. Maybe they are always on their phone during dinner. Maybe their idea of cleaning is very different from yours. This is when you enter the adjustment period. The part where you're figuring out if this person fits into your actual life, not just the fantasy version you had in your head. With stocks, this hits hard and fast. That company you loved, suddenly, a quarterly earnings came out and they're, okay, not terrible, but not the explosive growth you imagined. Then the stock drops 10% because the market expected something different. Then there's some regulatory news that creates uncertainty. Then a competitor announces a new product. Then the broader market sells off and your stock gets dragged down with it. And you are sitting there thinking, what did I get myself into? Here's where it gets really similar. In relationships, during this adjustment phase, you start questioning everything. Is this normal friction or a fundamental problem? Am I being too critical or am I ignoring real issues? Should I work through this or cut my losses? You know what happens with stocks? The exact same spiral. You start second-guessing your entire thesis. Did I miss something in my research? Is this company actually not as good as I thought? Should I sell now before it gets worse? But what if I sell and then it recovers and I look like an idiot? This is the danger zone. This is where emotions take over and people make terrible decisions. They either panic sell at the worst possible time, or they stubbornly hold on to something that's genuinely broken because they can't admit they were wrong. It's the investment equivalent of texting your ex at 2 in the morning or refusing to break up with someone who's clearly wrong for you just because you've already invested so much time. But here's the thing about relationships that survive this phase. You start learning each other's patterns. You realize that when your partner gets quiet, it doesn't mean they're mad at you, they're just processing. You learn that they need coffee before any serious conversation can happen. You figure out that their stress shows up as mess, not moodiness. You're building a database of understanding. And that makes everything easier going forward. The same thing happens with stocks if you pay attention. You start noticing patterns. Okay, this stock always dips after earnings, regardless of how good they are, because traders take profits. Or, this company's stock is extremely sensitive to interest rate news. Or, the CEO tends to underpromise and overdeliver. So initial reactions are often to negative. You are learning the personality of this investment. And that knowledge is incredibly valuable. It means the next time there's volatility, you're not freaking out, you're recognizing a pattern you've seen before. In relationships, you adapt. Maybe you realize that having separate bathrooms is non-negotiable. Maybe you establish a rule about not making big decisions when you're tired. Maybe you learned that Sunday mornings are sacred alone time. You're not changing who you fundamentally are, but you're finding ways to coexist better. With investing, adaptation might mean adjusting your position size. Maybe you thought this would be a 10% position, but given its volatility, you scale it back to 5% so you can sleep at night. Maybe you set up alerts at certain price points instead of checking obsessively. Maybe you decide to only review this investment quarterly instead of daily. because the short-term noise is making you crazy. You are not abandoning your thesis, but you're being realistic about how this investment fits into your life and your portfolio. Every relationship goes through tests. Maybe it's a stressful move, a job loss, a health scare, an argument about something that reveals deeper values. These moments show you what you're really working with. Are they supportive when things get hard? Do they blame you for problems or work with you to solve them? Do their actions match their words? Stocks go through the same tests. Bear markets, earnings misses, leadership changes, competitive threats, industry downturns. These aren't fun, but they are informative. They show you whether the company has real resilience or if it was just riding a favorable wave. And critically, they show you whether you actually understand what you own. If a stock drops and you can't explain why, or you panic and can't remember why you bought it in the first place, that's a sign you didn't really know what you were getting into. But if you could look at the turbulence and say, yeah, this is unpleasant, but the underlying thesis hasn't changed, that's when you know you've done your homework. That's when you know you're not just reacting emotionally. You're making informed decisions based on real understanding. You know what kills most relationships? Poor communication. Not the big dramatic blow-ups, but the slow erosion that happens when people stop being honest with each other, when they avoid difficult conversations, when they make assumptions instead of asking questions. With investing, communication means staying informed, reading the quarterly reports, understanding management's decisions, following industry trends. If you buy a stock and then just ignore it, hoping it works out, you are basically ghosting your own investment. And just like in relationships, that ignorance doesn't protect you, it just means you'll be blindsided when something goes wrong. On the flip side, over-communication can be just as bad. Checking your portfolio every 5 minutes, reading every headline, obsessing over every tick up or down. That's like texting your partner constantly asking, "Are we okay? Are we okay? Are we okay?" It creates anxiety without adding value. You need to find that sweet spot where you're informed without being obsessed, engaged without being consumed. Not every relationship works out. And that's not always a failure, sometimes it's just incompatibility. Maybe you want different things. Maybe the timing is wrong. Maybe you're both perfectly fine people who just don't fit together. Same with stocks. Sometimes you buy something and after living with it for a while, you realize it's not what you thought. Maybe the business model doesn't actually work the way you understood it. Maybe management makes decisions that conflict with your values or risk tolerance. Maybe the competitive landscape has shifted in ways you didn't anticipate. And here's the important part. Recognizing that and moving on doesn't make you a bad investor. Actually, it makes you a mature one. The ability to say, "I was wrong about this, and I'm going to exit gracefully," is incredibly valuable. The key is knowing the difference between normal adjustment friction and genuine incompatibility. That's the skill that takes time to develop. Normal friction is when earnings are slightly below expectations but the long-term story is intact. Genuine incompatibility is when you realize the company is structurally flawed or operating in ways you fundamentally disagree with. But when you find the right fit, when you get through that adjustment period and come out the other side, that's when the magic happens. In relationships, you move from uncertainty to security. You develop shorthand communication. You can handle challenges together because you've built trust. You are not constantly questioning everything because you understand the fundamentals. You know their flaws and you've decided you can live with them. You know their strengths and you appreciate them even more deeply because you've seen them tested. With investing, the stocks that make it through your adjustment period become your core holdings. These are the positions you understand deeply. The ones where volatility doesn't scare you because you know what you own. The ones where you can confidently add to your position during dips because you've seen this before and you know how it resolves. These are the investments that compound over years and decades. Not because they never go down, but because you have the conviction to hold them through the inevitable rough patches. You've seen them navigate challenges. You've watched management make tough decisions. You understand the business cycle they operate in. This deep familiarity breeds confidence, and confidence enables patience, and patience is how wealth is built. Think about Warren Buffett and Coca-Cola, or his holdings in American Express. These aren't relationships that started perfectly. There were difficult periods, marketing skepticism, moments of doubt. But he understood what he owned. He was patient through the adjustment period, and he built convictions that allowed him to hold through decades of ups and downs. That's not luck. That's the result of doing the work during the adjustment period and coming out the other side with genuine understanding. Here's the bottom line. Whether we are talking about relationships or investing, the adjustment period is not a bug, it's a feature. It's how you separate real potential from surface level attraction. It's how you build genuine understanding instead of operating on assumptions. The people who succeed in both areas are the ones who can tolerate discomfort without making rash decisions, who can observe without overreacting, who can adjust their approach without abandoning their standards. They understand that initial friction doesn't mean failure, it means you're in the process of figuring out if this is actually going to work. So the next time you buy a stock and it immediately starts doing weird things, take a breath. You're not necessarily wrong. You might just be in the adjustment period. The question isn't whether there will be friction, there always is. The question is whether you are learning from it, adapting appropriately, and building towards something that can last. Are you paying attention to what the stock is teaching you about itself? Are you honest about whether your original thesis still holds? Are you making adjustments based on new information or just reacting emotionally to price movements? Because the best investments, like the best relationships, aren't the ones that are easy from day one. They're the ones where you do the work, developing real understanding, and build something that can weather whatever comes next. They're the ones where you move from infatuation to commitment, from excitement to trust, from hoping to knowing. And that, my friends, is worth waiting for. That's where the real returns are, both in your portfolio and in your life.